right, so what we're going to do today is we're doing a year-end close for GP. It's going to be done in GP 2010 R2, which is the most recent version of Great Plains. In this presentation, you're going to mostly see slides. We're going to pop into Great Plains every now and then, and like I said, do ask your questions at the end. There's going to be some consistency through this. Going to start off with steps of what to do for closing. We're going to follow that by what does closing do to the module and to other things, and then tips and hints about closing that module or that series. So as we begin, we'll just jump right in. Oh, by the way, I didn't introduce myself. Many of you already know me. I'm Rochelle, and I'm one of the client care teammates at OmniVue. So here we go. What to do, and everyone will get a copy of the slide deck. If you registered for this class, you will get a copy of this slide deck. So what to do in what order? This is our recommendation. It's a recommendation I found on the Microsoft website. They recommend you close inventory first, then receivables management, then payables, fixed assets, analytical accounting, and then GL last. You should also definitely be sure to close payroll. That's always to be closed at the end of the calendar year after your last payroll, but we're not going to cover payroll during this session. Any questions that also come up during the class, if you're not comfortable at the end asking them, feel free to email client care, and normal billing rates will apply. Inventory details, because we're going to start off with inventory first. So what is recommended for closing the year when it comes to inventory? We recommend, obviously, you post all your transactions for the year. You do a reconcile inventory quantities. That's an actual reconcile process found in GP, and I'll open GP in just a second. We recommend you do a physical count and post any adjustments before you close the year. Print any additional reports that you may need to keep for the year for your audits. Make a backup. This is the important part of any closing process that we're going to go through. The backups are critical. If something happens during the year-end close and it's half done and gets stuck for some reason, if you didn't have a backup, it's going to be very difficult to continue with helping. Close the year is the next step. Close the fiscal period for inventory. That's under fiscal period maintenance, and that's just the checkbox. And then make your final backup that says post year-end close. So I'm going to pop into Great Plains for just a sec so that you can see the routine under inventory that is called reconcile. This is one of the things that reconciles the quantities of your items, and it's one of the recommended steps. On the slide deck, I'm going to pop back to the slide deck. There's going to be a lot of this pop back and forth. On the slide deck, wrong slide, there we go. For the reconcile quantities, we also recommend you do a backup before that as well. It's not on the slide, so make a note that we recommend you do a backup prior to running a reconcile quantities. What does inventory close do? It transfers all summarized current year quantities. It transfers the costs and the sales amounts to the history tables for the items that you've been keeping summarized sales history for. It zeroes out the quantity sold field. It does all of these steps, and it uses the inventory year-end close window when we're doing close. I'm not going to go through each bullet because like I said, you'll get a copy of the slide deck. Some tips that we recommend is the year-end close should be done, or we recommend that it must be done before any transactions are posted to the new year. And that's because year-to-date bucket in the inventory inquiry window, that year-to-date bucket will include anything that happens prior to the year-end close. All right. There's not a report that gets produced from the inventory year-end close, so a lot of people will sit there and go, where's my report? There is no report for year-end close of inventory. For receivables, we recommend that you post all sales and receivables for the year. You make a pre-year-end close backup, and then you close the receivables year. We also recommend that you close the sales module in the period maintenance window and then you close your tax year if you're tracking taxes in GP. And then you make a post-year-end close backup as well. So you have one before the year-end close and one after the year-end close. People always ask me, what does closing the year do in receivables? And my answer is it just moves things from the year-to-date bucket to the life-to-date bucket, or to the last year bucket. This is details of every single thing that gets moved. So in the calendar, there's calendar year and fiscal year. People usually close them together. You can close them separately. But closing the year basically takes things from the finance charges bucket, the total waived bucket, the unpaid finance charge bucket, and it moves it. It clears out the current window and moves it to the LYR, to the last year bucket. And same with fiscal year end. It takes it from the year to date and moves it to the last year. So year to date becomes 0. That's why we recommend you do this before you post any current year process or any current year transactions. Some tips. Although receivables management is date sensitive, Smart List objects, receivables management summary reports, and amount since last close view in the customer summary window, those are based on the date that you close receivables management. So if you close the module for receivables in June or July because you forgot to do it in December, then anything you do, and if you have a calendar year, anything you do for the first 6 months, your buckets are going to be a little skewed, or quite a bit skewed. So we recommend that you post all sales before you close the year. And if you have to book an invoice or book a payment for somebody, we recommend that you don't post the batch until after the year is closed, and that way you can make sure those buckets stay nice and clean. For payables, similar to receivables, we want to make sure that all the transactions are posted. That if you're using the purchasing module, that includes purchasing receipts. We want to make sure that you print your aged trial balance report. So this way you have your aging pre-close, because after the year-end close, we're going to say that we recommend that you do your aging again so you can compare them. The vendor period analysis report is something that Microsoft recommends that you print. It's up to you if you print it or not. If you're going to print it, I'd say print it to screen first or to file, because it is quite a large report. If you had any payroll year-end updates, people usually do it during the payables year-end close. I always get the question about 1099s. You don't have to print them before you close the year, but if you were ready to print your 1099s at the end of the year, you can do steps 5, 6, and 7. If you're not ready to do your 1099s yet, you can skip those steps, and you can actually process in the new year and then print your 1099s during the new year. So on step 8, you're going to make a backup, and this is very important before you do any close year process. Make a backup. You'll close the year, check the box in the fiscal period maintenance window, close your tax year if you're tracking GP taxes, and then do another backup. You'll also, as I mentioned, print another aging to compare the balances. They should all stay the same. All right. What does payables management close do? It does the exact same thing that receivables did. It moves things from the year-to-date bucket to the last year bucket. It zeroes out the year-to-date bucket. And so all of the fields that you see in the middle section, they are the ones that get zeroed out during the year-end close process. The top bullet that says the calendar year process clears the 1099 year-to-date amounts and then transfers them to the last year bucket. That is what it does, but when you print your 1099, it now bases it on check date and not on the bucket value. So that's important. When you are printing your 1099, the 1099 is based on the check date. Payables management tips. There's no current year 1099 amounts, inactive vendor records are automatically removed or are not. Inactive vendor records are not automatically removed. To remove an inactive vendor record, there can't be any 1099 year amounts, and there cannot be any documents in work or history. What that means is if you have paid a vendor, you can't remove the vendor, whether they're inactive or not, because anything that you've paid on a vendor becomes history. All right? For fixed asset close, it's recommended that you perform the year-end close for payables first. And the reason for doing the payables one first is because you can have your fixed assets automatically update your accounts payable. So we recommend that you make sure your payables is closed. You enter all your fixed asset transactions and fixed asset adjustments. We recommend that depreciation is run through the last day of the year, and that you do your GL posting, your GL interface. That GL posting part is optional, but if you're going to post your depreciation, you definitely want to make sure you do that. Run any end-of-year reports. Now that's kind of vague, so I'm going to go ahead and show you in GP those year-end reports. So under financial, under fixed assets, under reports, let's go ahead and minimize that, you have all of these. So it's recommended that you do the activity one, you do the transaction report, you do the retirements report, it's really recommended that you produce one of these reports for each of those reports. If you print them to screen or to file rather, file is the best way. You'll have them in case you need to reference them again. If you have more than one fixed asset book, it's recommended that you run the fixed asset report for, did I do inventory? Let's see. Comparison. If you have more than one book, it's recommended that you do the comparison reports. Those reports are recommended as well. Go back to our slide deck. Then we recommend that you do your backup. Make sure that your fixed asset calendar is built correctly. And then make sure you have quarters for the new fiscal year that you're about to create, and then do the fixed asset year-end close routine. And that's under routines. So those are the steps for closing fixed assets. What does closing a fixed asset module do? Well, it takes the quantity and copies it to the begin quantity field. It takes the last maintenance window, it takes the year-to-date maintenance field, and it clears it because it's a year-to-date field. All the year-to-date data moves into the life-to-date data. The salvage value is copied into the beginning salvage values. The book setup, your year is increased by 1. Your cost basis year is incremented. So that's what fixed asset close does. Some fixed asset close tips. Transfers and undo retirement transactions should not be performed in a historical year. What does that mean? It means if you have any asset transfers to do or any asset retirements that need to be done, you need to do them in a current year. So if you've closed 2011 and then you determine, oh, I need to retire that asset, go ahead and retire it in 2012. It's not recommended to do that retirement in a prior year, a historical year. The year-to-date depreciation amounts for previous fiscal years, they're not kept in fixed assets. And that's why all those reports are recommended that you run. And again, we've listed the reports in this slide, so just to make sure you see it more than once. Because those reports cannot be printed for a prior year. No report is generated during the fixed asset close routine. And if you close your fixed asset year after you've run your current year depreciation, it's recommended that that some additional steps are followed. And there's additional tips here. So 2 recommended workarounds if you do end up with a problem, and that's restore from a backup or run depreciation through the last day of the year and then do your closing procedure. If you don't, Microsoft actually recommends that you reset the life on all the assets and redo your depreciation.